the holiday season has looked very different for shoppers and retailers this year. So which stocks are going to be the best positioned as we head into 2021 and hopefully a return to something like normal? Morgan Stanley's Simeon Gutman and D.A. Davidson's Michael Baker both join us now with their top picks in retail. Simeon, I believe you like the home improvement names, Home Depot, Lowe's. What convinces you that they haven't seen their best days in 2020?
Well, I think one of the themes this year, I think everyone knows, is this massive shift to spending on the home. What I think is underappreciated into next year is we still have very robust demand for housing, for dwelling, for home improvement projects. And normally you would think that lapping this big surge in demand that you had 2020, you'd see a little bit of a valley. We don't think that's going to be the case. The demand for household formation, for existing home sales, we think that's going to be on fire, and it's going to be enough to offset the deficit that you're going to see in some of the wallet share shifts. So these are really good businesses. They're growing sales 20% above and beyond what they should have grown. If they retain that amount of sales, which we think they will next year, and a lot of the temporary costs go away, the earnings power should be explosive.
Okay, and Michael, for the people who are getting outside the house, maybe engaging in some athletic activity, what's happening with sporting goods retailers that investors should be thinking about?
Well, Dick's is a name that we like as well, and we think that's an undervalued stock, and we saw an acquisition in that space at a much higher multiple. So we think that really highlights how undervalued a name like Dick's is. What we're seeing is people have more time at home, and they're spending that time taking advantage of different athletic endeavors, whether that be playing a little bit more golf and when the weather's good, or when the weather's not as good, maybe some cross-country skiing or that type of activity. People are just getting outdoors more, and that's driving sales at retailers like Dick's. We also think there was an important data point last Friday night in Nike's earnings report, and it really just highlighted the improving and strong relationship that a company like Dick's has with a key supplier like Nike, and Dick's being one of their preferred retail partners. Nike is supporting them, and we think really going to help them take market share next year.
Simeon, I'm fascinated by your home improvement call, because we know that the housing data has moderated. Supply is tight. Pricing's way up. There's some material shortages. Is the sector reliant on more strength in housing, or is it more a function of, well, we're not going to be able to get a new home, so let's redo the one we have?
Yeah, so we think the driver for 21 is actually the traditional cycle of existing home sales. You mentioned that supply is tight. That could be the one risk. The reason why is that if price appreciation doesn't continue, then people won't put as much money back into their existing home. But we think that cycle will continue because there is still a lot of migration. People who haven't sorted out where their ultimate plans will be next year, I think they're going to figure that out. But if you look at the underlying drivers, whether it's household formation, the demand that we're seeing currently, it looks like you're going to have a pretty robust, call it mid-single-digit growth in existing home sales, which would make it a pretty big year on top of what we saw in 2020.
Michael, I know we have this D.C. dysfunction happening right now, particularly with things like stimulus checks and the size of those checks that will be cut to Americans directly will ultimately look like. But the last time we did see a similar check that was issued to Americans, it actually boosted or it showed up to a certain extent within retail data and retail sales as well. Is the expectation that we're going to see something similar again?
Yeah, I do think that if we got another stimulus check, a lot of that would be spent, particularly if it comes right around the holiday period and then early next year. And we saw that spent in areas like home improvement, and I agree with Simeon on his call on Lowe's, one of our favorite ideas. We also think you could see continued strength in gaming. Gaming is a hot category right now. We think that will continue into 2021, and that would benefit a name like Best Buy. Another top idea we have is BJ's, and we like the Warehouse Club and BJ's in particular, as they've picked up a lot of new members this year. We think that'll be sticky, and we think some of that stimulus money could be spent at a retailer like that.
Simeon, I expect that Omni-channel, that combination of brick and mortar and digital strategies, is going to continue to be important for retail in 2021. So to what extent should investors expect an increased investment in technology that could affect retailer margins in 2021?
Yeah. So first, to your point, I think 2020 showcased the power of omni-channel. That may be a little cliche, but it really was on display. It worked. The idea that you could use your stores, your distribution centers, whatever other assets you have to get this demand through. And some of the biggest retailers, Walmart, Target, the home improvement companies, they are dealing with demand that's 10%, 20% above normal. And they've done a phenomenal job with it. Those companies have been investing heavily for the past 5 to 7 years. And I think you're seeing the scalability of those investments. Some other retailers that may have lagged behind, mid-sized ones, you could see some technology investments catch up or leaning into some technology investments. But I would say for the most part, you probably have seen some of the best demonstration of their technology on display in 2020 already. We don't think there's another big step up. A lot of companies, as I mentioned, leaned in 2020 along the way.
Interesting. Okay, so maybe no big step up in those costs. Thank you. Simeon, Michael, happy holidays.
Shepard Smith here. Thanks for watching CNBC on YouTube.